A very good afternoon, viewers. You're back on ET Now watching Market Fatafat with me, Kanishka and Ashesha. Well, it's a busy day on D Street. Benchmark indices holding steady. Key earnings and global headlines shaping the sentiment. We've got all the big movers, earnings hits and misses, and what's buzzing in trade over the next 1 hour. But before that, Ashesha, how are the markets looking like right now?
Well, absolutely. We've given up most of those morning gains. In fact, Nifty is now up about near that 24,790 odd mark, up 110 points as we speak. And Nifty Bank is also holding up steady, 110 points higher for Nifty Bank, near that 54,980 odd mark. All sectoral indices continue to trade with gains. On the index level, though, we have BEL or Bharat Electronics, which is up 4%, the biggest gainer on the Nifty 50 index. We have Cipla, which is up over 2%. Tata Steel, HDFC Life, Sun Pharma, Tech Mahindra. These are some of the other gainers from the Nifty 50 index. On the losing side, though, ahead of its numbers, IndusInd Bank, that stock is down 2%. JSW Steel, Kotak Mahindra Bank, Coal India, all of them are trading with losses in today's trading session. IndusInd Bank for you on your screen, 766. It will be reporting its numbers later today. In terms of individual sectors, real estate sector is the sector that is gaining the most today. Nifty Realty Index is up over 1.5%. We have DLF, which is up over 2.5% today. Phoenix Mills, Oberoi Realty, Lodha, Prestige Estates, all of them gaining in excess of 1.5% in trade. We also have select metal stocks which are in focus. SAIL, for instance, is up 2%. We have Nalco, Tata Steel, NMDC, all of them gaining in excess of 1% in trade today. So all in all, turning out to be a good day for Indian markets. We are reversing most of the losses that we registered in yesterday's trading session. So Kanishka, let's get started with all the stocks that are buzzing today.
Well, absolutely. Before that, let me welcome our guest Ajit Mishra, who's the Vice President Research at Religare Broking, and also Ravinder and Gaurav from our team to discuss all the stocks that are buzzing in trade today. Well, first of all, let's talk about Indigo, that's in focus and is going to report its earnings later in the day. Well, a strong quarter is expected from the airline, though margins could be impacted. If you look at Bloomberg estimates, now Indigo is expected to report a 22.8% uptick in its revenue at about 21,887 crore rupees, whereas the profit is expected to go up nearly 36%. EBITDA, on the other hand, may grow 21% on a year-on-year basis, though margins could contract slightly to 24.1%. If you look at it on a sequential basis, revenue is expected to dip about 1%, while profit is expected to improve 5%. However, EBITDA could fall sharply by 28.5% on a sequential basis, with margins slipping nearly 925 basis points due to lower average fares. Fuel cost per seat is seen easing at 6% year-on-year, though fares declined 13% sequentially, which may pressure profitability going ahead. And the board is also expected to consider a dividend payout, and investors will closely watch management commentary on the impact of Pratt & Whitney engine issues on fleet availability. Overall, a good set of numbers is expected, though margin might be impacted. Now, ahead of the results, Indigo shares are trading just about flat, but it's remained in the negative territory in the past month. However, it's up about 19% in 2025. Let's see if the momentum continues post Q4 earnings.
All eyes on Interglobe Aviation as it will be reporting its numbers later today. But let's shift focus to Cholamandalam Investment and Finance. That's on Ajit's radar today. The stock is up 2.5% in trading today. Ajit, what do technical charts suggest?
Yeah, good afternoon, Ashesha. So, Ashesha, we are seeing that after yesterday's slide, there's a tussle going on among the bulls and bears in the beginning. But we have a handful of stocks in the financials basket which has been consistently holding strong. And one such name is Chola Finance, which is currently quoting closer to its record highs. So, after this 2-3 days of consolidation, again, we are seeing that the stock has resumed the trend and we are inching towards the newer highs. We believe that based on this recent consolidation and overall outperformance, this move is likely to continue. So if somebody is looking for any fresh trade within the financial basket, one can consider Chola Finance with 1590 as a stop loss, with 1730 to 1750 as the immediate target zone.
As far as Cholamandalam Financials is concerned, the stock is up 2.5% today, and we got a technical view on this counter. But let's shift focus to the pharma sector then. In Gland Pharma, the top gainer on the index, and the stock is up nearly 4% today after reporting very strong setup. Although the numbers actually were on the weaker side, but the management commentary for FY26 is very positive. If you look at the numbers, revenues declined by about 7% on a year-on-year basis. Margins at 24.4%. That's an uptick of about 100 basis points. But remember, EBITDA margin for their legacy business came in at 38.3%, and that is what has surprised the streak positively. Sustainable improvement is what we have seen as far as their legacy business margins are concerned, and their guidance for FY26 also continues to remain very positive, where they say that we could see mid-teen double-digit revenue growth as far as Gland Pharma is concerned. So very positive management commentary for FY26. All the numbers were on the weaker side, and that is the reason the stock is up 4% in trade today.
Absolutely positive commentary coming in for Gland Pharma. But let's also take a look at IndusInd Bank, which Gaurav has picked out for us. The stock is down about 2% in trade today. Gaurav, what is leading to those moves?
Well, as when we talk about IndusInd Bank, this bank is also going to come up with the results. And when we talk about results, this quarter is more going to be focused on the other factors than the operational updates. So first, let's talk about operational updates. When we talk about the loan book growth and advances deposit growth, we are expecting around 6% growth. And at the same time, some weakness can also be seen on the asset quality front, because let's not forget that the MFI pain is not behind us. But other than that, there are a few concerns which will be in focus in this quarter. And the first being that there are one-offs. First, let's talk about a one-off around 1959 crore rupees, which bank had disclosed earlier because of the currency discrepancies. Another one-off will be somewhere in the tune of 670 crore rupees in terms of net interest income, both of which can actually impact the overall profitability negatively. In fact, now the street is penciling in bank to report losses in this quarter. So definitely these are the areas which will be in focus, and overall a weak set of numbers is what we're expecting. Other than that, let's also not forget that CEO also resigned, and that is the reason why any kind of commentary on how the management trajectory is going to be is a key thing to watch out for. Let's also not forget that net interest margins are also going to be a little weak. So definitely watching out on commentary. But all in all, weak set of numbers is what we're expecting from IndusInd Bank in this quarter.
Okay, so we are expecting weak set of numbers from IndusInd Bank. It will be reporting its numbers later today. That's the fundamental view and the expectations from earnings. But Ajit, on the technicals ahead of numbers, where do you see the stock headed?
So Ashesha, as we all know that the banking index of late made a new record high, and it was among the top performing sectors. But select stocks like IndusInd has been trading almost in the opposite direction due to the recent development, on the management side and the other discrepancies. Of late also we were seeing that after the initial phase of recovery, the stock is again fizzling out. It has already breached its short-term averages, which is not a good sign before the numbers. Means it indicates that market and participants are anticipating further pain in the stock. So in case somebody is holding this stock, they should definitely maintain a strict stop at 740 if it's a trading position, especially before the numbers. Or one can definitely avoid, because the texture looks weak, and probably around 700 to 680 something that the stock might test in days to come. So it's definitely a weaker candidate within the banking space. One should refrain from any side of any type of long position, be it short term or long term.
Right, thank you, Ajit, for that view. A weaker candidate in the banking space. But let's move on and go to Ravinder now. Ravinder, you've picked out BEL for us. Very bullish commentary coming in from brokerages.
Well, as on back of brokerage note, BEL is in focus. Remember that on Monday, after market hours, BEL has announced a Q4 number, and Q4 number was about the estimate. And yesterday on con call, the company has raised their EBITDA margin for FY26. So yesterday also the stock is in focus, and today on back of brokerage note, stock is in focus, where Macquarie has maintained the outperform rating, and they have raised target price to rupees 4,000 as compared to 365. And CLSA has also maintained their outperform rating, where they have raised the target price to rupees 423, while Morgan Stanley has also maintained the overweight rating on the BEL, and they have also raised target price to rupees 418 as compared to 364. So back of this bullish brokerage note, stock is up over 4%.
Okay, so on the back of this report that has come in from Macquarie, BEL is up 4%, the top gainer on the Nifty 50 index. But several pharma stocks in focus today. We spoke about Gland. Let's also talk about Torrent Pharma. This one also reported its numbers. It is off the day's highest point, but despite that, gaining trading with gains in excess of 1% today. Let's talk about numbers then. Revenue has come in at 2,959 crores, which is an uptick of 8% on a year-on-year basis. EBITDA has seen an uptick of 9% YOY, and margins have also expanded to 32.6%, which is an expansion of about 40 basis points on a year-on-year basis. So strong set of numbers. The stock, although has given up most of its morning gains, is still trading with gains in trade today.
All right, let's move on and take a look at HDFC Life then, which Ajit has picked up for us. Ajit, the stock is up almost 1.5% in trade today, and has seen a rally of about 23% this year. Do you expect this momentum to continue going forward?
Yeah, certainly, because if you see that within the life insurance basket, HDFC Life was among the first candidate who witnessed recovery, and now the stock has almost reached to its record high levels. And the way we were seeing a very tight range consolidation amid all the volatility in the market, and now again stock inching higher with a decent amount of volumes, this clearly indicates that bulls are completely under control, and this momentum is likely to extend further. So with stop at 740, if somebody is having a short-term view, let's say for a week or 10 days, they can consider going long with 820 to 840 as a positional targets.
All right, thanks, Ajit. Now let's take a look at ONGC then. In fact, the company is also set to report, is also going to report its earnings today. And as per our ET Now poll, it's going to be a mixed set of numbers for Q4. Revenue is expected to remain flat around 33,709 crore rupees, while EBITDA may dip 4.2% on a sequential basis. Margins are also likely to soften to 53.9% from 56.25% sequentially. However, profit is expected to rise almost 7% on a sequential basis to 8,810 crore rupees, beating Bloomberg estimates. On the operational front, crude production is expected to fall 2% and gas output may decline 5% sequentially. Benchmark crude prices averaged $75 per barrel, flat QOQ, but down 8% on a year-on-year basis. APM gas prices remain capped at $6.5 for Q4, but have been revised upwards for the next quarter, which may aid future margins. The key monitorables remain ramp up in gas production volumes. That is something that the street is closely going to watch. Now, ahead of the results, ONGC stock is trading flat with a negative bias, but let's see how it performs following the earnings.
All eyes on ONGC's numbers, which will be declared later today. But let's shift focus to a company from the tyre sector. JK Tyre, the stock after reporting its numbers is up a whopping 11%. Gaurav, tell us what was so positive about the numbers of JK Tyre.
Well, yes, when we talk about JK Tyres, we have already seen that the report were actually a little negative, because in fact when we talk about revenue, that was actually flat on a YY basis, but profitability declined almost by 42% on a year-on-year basis. In fact, when we talk about EBITDA margin, there also we saw a contraction on a year-on-year basis, but let's not forget the story behind the sequential numbers. So because when we look at sequential numbers, we have seen a significant improvement. In fact, what the management has also suggested is that because of the lower raw material prices, from here on we will see margin expansion, and there is another support which is coming up is the demand. What management has highlighted is that there is robust demand, and that is because of the four factors. First is that the government's focus on the infra. Second is strong pipeline in terms of new vehicles, potential easing of interest rates, and the normal monsoon. All of this can actually drive the demand. What they're saying is that from here on we will see 2.5% of a decline in raw material prices, and as a result, when we talk about the margins, that can improve. In fact, when we talk about debt level, company is very promising that the debt levels can also come down, and that is the reason why when we look at the stock performance, it is up in trade almost 10%. So that definitely beyond numbers, because of the management commentary, the stock is up in trade today.
All right, positive management commentary leading the stock up. Ajit, now let me come to you. Let's talk about Lodha then. The stock is up about 1.5%, and if you look at the month's trend, it's gone up more than 8%. Do you expect this momentum to continue going forward, or what are the levels that you're spotting for us?
Yes, so basically, if you see that last week, Realty Index was among the top performer within the sectoral basket, roughly around 10% kind of a gains. And with the DLF numbers out, we are seeing this momentum extending further. Lodha, among the realty counters, has been a steady performer, means it didn't participate much during the declines, and it could manage to strongly hold its major averages also during that phase. And now with the recovery, we are seeing gradual rebound, with every passing day. And we anticipate roughly around 1500 to 1550 levels to be tested, let's say in the coming weeks. So definitely you can consider going long around the current levels with 1320 as a closing stop loss for this stock.
That's as far as macrotech developers or Lodha is concerned, but let's shift focus to another earnings candidate, Dixon Technology. The stock is down 6% after it reported its numbers. But Rabinder, valuations is something that is hurting the stock, isn't it?
Well, yes, valuation is hurting the stock, but company has announced company's revenue has grew by more than 100% year-on-year basis. And if we talk about net profit, then net profit also saw a good uptick from 95 crore to 400 crore year-on-year basis, and margin also saw 40 basis point uptick year-on-year basis. But stock is not reacting positively on back of earning, and the key disappointing factor was the delay in commencement of production with Vivo, and delay in display sub-assemblies with HKC, and uncertainty around the likely increase in competition with the mobile PLA ending next current year. And JM has come out with a note on Dixon Technology, and they have downgraded the stock to hold with target price of rupees 15,650, which they have earlier given as 16,500, and they have cut EPS estimate for FY26 to 27 6 to 7%. So Q4 number of Q4 FY25 of Dixon Tech number was operationally strong, but the high valuation led to a stock decline, and stock is down more than 6%.
All right, strong numbers, but high valuations hurting the stock. But with that, it's time to take a very short breather on this edition of Market Fatafat. We'll be right back with more stocks in focus. Stay tuned. Welcome back to ET Now. You're watching Market Fatafat with me, Kanishka, and Ashesha. We're discussing all the stocks that are in focus today. It's time to talk about Divi's Labs then. Ajit, I want to get your view on that one. It's up about 1.5% in trade today. If you look at the past month's trend, it's seen about a 12% rally. So what are the levels that you're spotting for us for this one on the charts?
Right. So basically, if you see that in today's session also that we are seeing noticeable outperformance from the pharma counters, and within this space, Divi's has been consistently maintaining this outperformance. Almost 5-6 months of consolidation, the stock has made a new record high post numbers, and we expect this kind of momentum to further extend basis this overall chart pattern and the kind of volumes that the stock has been experiencing. I believe that close to around 62.50 is something that we have formed a strong base in the stock, and positionally the stock can inch towards 7,000 plus levels. So if somebody is having a view of, let's say, for 1 week to 10 days, they can definitely consider the stock to accumulate current levels.
The technical view coming in for Divi's Laboratories. Clearly, we have spoken about a whole host of pharma stocks today, but let's shift focus to Whirlpool then. It reported its numbers and the stock is reacting to that. Revenues have risen by about 16% on a year-on-year basis. They've come in at 2,005 odd crores. EBITDA have expanded by 27% on a year-on-year basis, and margins have come in at 9.1%. The stock, of course, is off the highest point of the day. Earlier in the day, the stock was trading with gains, but now has given up most of those morning gains. The stock is sitting with a cut of over 1.5% today.
All right, Ajit, now let me come to you. Let's talk about Siemens India then. The stock is up more than 3% in trade today, but if you look at the move so far this year in 2025, it's gone down more than 50%. So what are the levels that you're spotting for us on this one?
Right, so basically in the capital goods segment, we are started seeing some bit of traction. So be it Siemens, ABB, all these stocks after this noticeable correction from the record highs are forming base for almost 1.5 months. Now the stock has reclaimed its medium-term moving averages on the daily chart around 100 DMA. And now with the break around 3300, we'll have a clear confirmation that the stock is set for the next leg of the up move. So in case if somebody is looking to accumulate the stock, basically since we have seen almost all the sectors participating in the move, stock selection becomes very critical at this juncture. Siemens is basically offering that opportunity with a favorable risk to reward ratio, with 3,000 as a strong support area and 3550, 3600 as a position targets.
All right, those are the targets for Siemens. But now let's talk about JSW Steel then, which is in focus on the back of a source-based report that says the company may lose tax benefits gained from its 2020 acquisition of Bhushan Power and Steel. Now, this comes after the Supreme Court scrapped the takeover earlier this month. Now, remember, the Supreme Court had rejected the resolution plan submitted by JSW Steel for Bhushan Power, terming it illegal and flagrant violation of the Insolvency and Bankruptcy Code, under which the steel steel company was acquired. Now, under the IBC, companies can offset losses of the insolvent firm against profits. Now, against this backdrop, Bhushan Power and Steel had 7,000 crore worth of losses, which it offset after becoming profitable post-acquisition. Now, as per an ET report, the Income Tax Department is considering to reopen Bhushan Power's assessment. Now, following this development, the stock has been trading almost 1% lower. But if you look at the trend since the Supreme Court ruling on May 2nd, the stock has seen an up move. The stock did go down almost 6% that day, but since then, it's been up almost 4%.
JSW Steel in focus on the back of that news, but let's slip into a short break on that note. Many more stock news and updates coming up on the other side. Stay tuned.